Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Silver hasn't been this cheap in 5,000 years of human history. Wow, what a title and what an interesting time. I mean, gold and silver since the beginning of time has been valuable, but this is the cheapest compared to gold that we've ever seen silver. We've never seen the gold to silver ratio at 125 to 1, which is absolutely crazy. It comes out of the ground 8 to 1. It's usually around 75 to 1, but we've seen it at 125 to 1. Now, what that means is it takes 125 ounces of silver to equal 1 ounce of gold, which means silver is extremely undervalued. So, more than 4,000 years ago, the city of Kanesh was quickly becoming an important commercial trading hub within the ancient Assyrian Empire. Kanesh was located dead in the center of modern-day Turkey, so it was perfectly situated on the route between the Mediterranean and the Black Sea, and between Europe and Asia Minor. As a result, Kanesh became a popular trading post, and merchants, scribes, moneylenders from all over Assyrian empires traveled there to profit from the boom in copper, tin, and textiles. So, what's extraordinary about this period of history is how many records remain from those day-to-day transactions. The Syrians borrowed the writing system, followed the ancient Mesopotamia, and routinely chiseled their commercial trades on clay cuneiform tablets. Tens of thousands of these tablets have been discovered by modern archaeologists, so we have incredible amount of detail about ancient financial transactions. For example, one tablet on display at the Met in New York City documents the terms of a loan that originated Kanesh sometime in 19th century BC. According to the tablet, the Assyrian merchant named Ashur-idi loaned 3 kilograms of silver to 2 traders with 1/3 amount of to be repaid in 1 year's time, or 1/3 of the amount to be paid. This was fairly common back then. Gold and silver were both used as a medium of exchange in ancient times, but this was before coins existed, so transactions would be settled based on weight. See, gold and silver have always been valuable and always will. It's like putting your money in a time capsule. In ancient Babylonia, for instance, which rose to power after the Assyrian Empire faded, the cuneiform tablets from that era tell us that the price of barley averaged around 17 grams of silver per 100 quarts. And merchants would use this to elaborate scales to weigh the gold and silver when exchanging their goods. Gold and silver were also exchangeable for each other. Another tablet from ancient Babylonia during the time of this Nuba guy said that 5 shekels of silver were worth half shekel of gold. So that implies a ratio between 10 to 1 between silver and gold. So even back then, and we can go even earlier in biblical times when it was 2.5 parts silver equals 1 part gold, meaning the ratio was 2.5 to 1. We've discussed this ratio several times. The gold-silver ratio has existed for thousands of years. Up until the 20th century, it remained within an ancient range between 10 to 20 units of silver per unit of gold. In modern times, gold and silver are no longer used as a medium of exchange, but there's still been a long-standing ratio that has persisted for decades. 1 ounce of gold has typically been valued at 50 to 80 ounces of silver. Rarely does the ratio go higher or lower, and when it does, prices have always corrected. And that's an important thing to mention. When the ratio does go higher or lower, prices always correct. Right now, they haven't corrected yet. We're just in the waiting period. As of this morning, the ratio is 112, meaning it takes 112 ounces of silver to buy 1 ounce of gold. And today's level is the spitting distance from the ratio's all-time high of 120, which it reached last month, and it's actually 125. When I say all-time high, I mean it. Ancient cuneiform tablets prove that silver's never been so cheap relative to gold in literally thousands of years in human history. If history is any guide, this means the ratio should eventually narrow. The price of silver should rise and the price of gold should fall, bringing the ratio back to its more normal range. There are plenty of ways to potentially make money from this. So, The CME's gold-silver ratio contract is very thinly traded and difficult to purchase, so it might be the best approach. So it might not be the best approach. And that's talking about trading using the gold-to-silver ratio to trade one for another, and you can actually earn free gold and free silver by simply trading as the ratios fluctuate. But personally, there's no chance I would bet against gold right now. I've written the past several weeks the best approach in this entire pandemic from a position of ignorance is uncertainty. Every possible scenario is on the table, and no one can say for sure what's going to happen next. And that was what I was talking about, this unknown variable, right? There's a lot of unknown variables that we really don't know where things are going to go, and this could heavily influence prices. So we could see something way out of left field happen. So, according to the Congressional Budget Office, the U.S. federal government will post a $3.6 trillion deficit this fiscal year due to all the bailouts. Plus, the Federal Reserve has already printed $2 trillion. Frankly, I think they're just getting started. With this incomprehensible tsunami of government debt and paper money flooding the system, real assets are historically a great bet. We've talked about this before. Real assets are things that cannot be engineered by politicians and central banks. Assets like productive land, well-managed business, and yes, precious metals. And yes, they all tend to do very well when banks print tons of money. Farmland, for example, was one of the best performing assets during the stagflation in the 1970s. And financial data over the past several decades shows whenever they print lots of money, the price of gold tends to increase. Right now, in fact, gold is relatively cheap compared to the current money supply. And the price of silver is ridiculously cheap compared to gold. Again, silver's never been cheaper in 5,000 years. This is why I'd just rather own physical silver. See, he's on that side as well. The physical metal is so much better. If you can't hold it, you don't own it, right? I'm not interested in betting against gold because I'd expect they'll continue to print money. In fact, I'm happy to buy more gold. And while we cannot be certain about anything, there's a strong case to be made the price of silver could soar. So, if you live, work, bank, invest, own a business, hold your assets all in one country, you're putting all your eggs in one basket. You're making a high-stakes bet that everything's going to be okay in that one country forever. All it would take is the economy to tank, a natural disaster to hit, or a political system to go into turmoil, and you could lose everything, your money, your assets, and possibly your freedom. And that's why it is really important when you are investing to diversify. Not only just diversify between high premium silver, low premium silver, but diversifying into gold as well. And it's taken a step further, diversifying into stock markets. I invest into stocks a little bit myself. You guys definitely know I've invested in a cryptocurrency. I did very, very well investing in a cryptocurrency. I bought Bitcoin at $1,800 and sold it at $18,000. So, diversification is definitely key, because if you have all your eggs in one basket and that basket falls, all your eggs are broke. If you have a whole bunch of eggs in a whole bunch of different baskets and one of those baskets drop, you still have a whole bunch of other baskets with eggs in them. So, that's why diversification is key, but definitely your main source or your main positioning in your portfolio should be precious metals, right? Precious metals is definitely the safest, smartest alternative with the most potential. And I use the word alternative because there is no solution. We're dumping all this money into the system, and it's definitely going to expose itself sooner than later. And the reality is going to be that we just don't have this money. So silver's never been cheaper, never been this cheap in 5,000, 6,000 years since the beginning of time, since the beginning of mankind. And that's very interesting to think about, because looking forwards 5,000 years, I bet silver's still going to be very, very, very valuable. Now, fiat systems, they run out dry. The U.S. dollar is not going to be the U.S. dollar for too much longer, right? It was just created, not even, it's a newborn baby compared to how long silver's been valuable. Fiat currencies will come and they'll change. Monetary policies, monetary systems, financial systems will change. But gold and silver will always hold its value. So anyways, I'm going to wrap this video up here. I definitely think this is an interesting thing. Where do you think the gold to silver ratio is headed? Do you think this ratio is going to normalize back down? Or do you think the ratio could go even higher? With the ratio this high, all it means is that silver is, or gold is outperforming silver, but the ratio has to lower back down, meaning that silver is going to outperform gold, meaning that gold either depreciates or silver appreciates, or they do a little bit of both. And I definitely think that silver is going to be the one appreciating, as it's very, very bullish right now, and there's a lot of potential for things to set up. So anyways, I'm going to wrap this video up here. Thank you so much for tuning into this video. Make sure to smash the like button. Make sure you subscribe because I post daily videos. This was Silver Slayer. I'll see you guys soon. Peace.